Welcome back to Fast Market, everybody. I'm Kevin Hincks, joined again by Steve Quirk, Executive VP in Education and Trading at TD Ameritrade, and Scott Bauer, CEO of Prosper Trading Academy. All right, guys. Market's coming back here, down 1.3% since about 10 minutes ago. It's up about 0.2% across the board. The Dow still down 1.7, though. That's the weakest of the four. But a couple things. Facebook now higher. Amazon now higher. We already talked about Nvidia was higher. So a couple. Netflix now higher. Apple's really one of the only FANG stocks still down on the day here. So.
I know you were laughing about a downgrade Nvidia got this morning.
No, upgrade.
An upgrade.
It was on the lows. Citron upgraded it on the lows.
I thought earlier.
No, the one
morning.
today was. What was the stock? We were talking about it. It wasn't Nvidia. It was.
It was a stock that had been creamed and then.
Yeah, that got beat up, and someone downgraded it today. We're like, not really?
Thanks.
Now.
Thanks.
Yeah, right. Yeah.
Thank you. Hey, warning, there was a storm yesterday.
Yeah, exactly. My goodness. Yeah. I mean, it's amazing that some of these analysts have jobs that do this. How can, at this day, after the open this morning, you downgrade a stock? Really? How could you possibly do that?
That's crazy. That's crazy. What's really, I think important what you just touched on, though, Kevin, with the rally and the rest of these FANGs, but not Apple. What does that maybe tell you? Maybe it tells you it's a little bit overdone on the rest of these other stocks, but Apple is different because Apple is front and center in the news on the downgrade that they just had, or coming out that their shipments are going to be lower. So the rest of these, maybe all the news is out already and people see a buying opportunity. But
it would be great if Apple said anything about their shipments. Remember, everybody else except Apple.
Yeah.
And that happened. It seems to happen once a quarter.
Yeah.
And someone correct me if I'm wrong. Isn't this the exact same story that was about a week ago?
Yeah.
Yes, it is.
It is no different.
Didn't they just read? What did they just?
It is no different.
Yep. Mm-hmm.
I mean, I believe I read the exact same story.
Yep.
And the stock is selling off more. They just keep regenerating the same story.
I mean, but you know what? I actually respect them for not saying anything.
Yeah.
I mean, you know what? Let them talk. We know our business. If if we're confident in what we're doing, we don't need to get into, the.
Remember, Tim Cook, a quarter ago, stood on the stage and said Apple was still growing, based on their services sector, and that is what took them to $1 trillion in market cap. So the question is, who do you think is buying Apple as it goes down here? Apple's probably buying Apple.
Warren Buffett.
Warren Buffett's probably buying Apple, right? So
those
numbers will come out.
Program.
Oh yeah, of course.
Yeah.
But they're heavy buying the stock down here.
They have a little bit of cash.
They have some cash on hand. All right, guys, let's look at two names that are coming out with earnings after the bell today and before the open tomorrow, and that is number one, Gap Stores. Now
You have that chart up, right?
I have the chart up.
Wow.
Matthew, follow us to the Thinkorswim platform here and put that chart up. That's not a pretty chart.
That's not really pretty.
But however, at some point, like Urban Outfitters Outfitters is up today on their earnings, right? If you like a stock like this, it's funny. Gap is made up of really 4 segments, but really 3 big ones. It's Gap, it's Old Navy, it's Banana Republic, and it's a little bit Athleta. But of all ones, it's Old Navy that's really driving this company
do you
forward.
shop at all 4 of those? Is that how you knew that?
I was just joking with Landon Swan. I went into a Banana Republic, and I liked every single bit of clothing I saw in there, which means that is the kiss of death for Banana Republic, because if I like their clothes, I am not their target audience, their target market. So that's a bad omen for Banana Republic. So I fully expect them to close any day soon.
That explains the chart.
Yeah, but I mean, they completely are redoing their stores. They're doing a lot of things, but it's still the low-priced Old Navy that's driving this company. And they basically mentioned that, right? How they're closing some of the Gap stores in Banana Republic and focusing more on Old Navy.
Now, for the longest time, though, you walk into a Gap store, would you ever buy something in the Gap stores that was not already discounted a minimum of 40%, if not 50%?
Right, exactly.
No, seriously. So, is that what caused this slide this year? No, because that's been their pattern. That's their model.
I mean, the stock went from 35 to 24. Pretty, over this year, and it's sitting just off that at 25.21 right now, just off the lows.
Scott and I were joking. Look for the support. Oh, yeah, there isn't
Good
any.
luck with that.
Yeah,
Ben
sorry.
Watson would have a field day with this name.
Yeah, exactly.
So it's making lower lows, it's making lower highs, but how do we trade it if we do it all? Remember, they punished every single retailer this morning that came out except for Urban Outfitters that had a nice beat, and Campbell Soup. Those are the two that were up pre-market. Everything else was down across the board. So how would we trade Gap stores, guys, if we wanted to?
Risk defined.
Exactly.
Yeah, thank you.
Risk defined.
Yeah.
But I mean,
If I knew nothing about this stock
Right,
and I
and
looked
looked
at
at
that chart, I'd sell a put spread.
IV percentile, 100%.
I'd sell a put spread.
Exactly. I mean, how low? The question is,
How far out?
yeah,
How
exactly.
far down below?
If you go, well, you got an expected move of just under 10%, $2.30.
So this is actually a good lesson in, forget about the name.
Right.
Just let's figure out how much premium we think it would be, we would need to get in order to warrant even deciding to place a trade.
If we do the 23.20, now that's cheap protection. They're only 8 cents there. That's 38 cents, but that's a $3 spread.
Yeah, it's pretty wide.
Yeah, but here's the problem that you find with Gap stores and a lot of these names: slow premiums.
Yep.
You know, this is one of those names that just doesn't have a lot of premium in the options. Why?
Right.
Because it's not very volatile. Now, that being said, the IV percentile is 100, so it's still at the high end of its range. But what the picture that we're painting here, guys, is it's not a very attractive stock to trade, is it?
No, it really isn't.
Right? You can place your margin capital better places right now than Gap stores, unless you want to do something in stock replacement. You could do something like that,
Right.
where you buy the longer dated option and then just sell the calls there. Maybe you go out to make a longer term play in March, go out to that 70 delta option right there around the 22s, right? Let me delete that. Go out to, the 22s.
And then maybe sell a call next week to get a little bit more premium.
Right.
Then, you know,
Exactly. Something like that, and then you go maybe to the. I mean, you've got some good numbers here. You can go do the 22, 27, 378, right? If you throw that up on the Analyze tab. Now, the one problem I would have with that is you got to watch Vega.
Yep.
On that, right? Now there's the play, but look at, you've got a little Vega. But let's check and see what Vega you have there. Let's make sure that Vega is not something, because we know that there's heightened numbers here. We know the range is 56 to 28. And what did we go out and buy? We bought next March. And we've got that to 22. It's a 50. 49 and change. That's high.
I would
That's
say
high. So
move
now,
on.
right.
Yeah, I'm kind of with
Now,
you.
we've looked at this basically every way we can look at it.
One other thing. Okay, let's say that you're a fan of this stock.
Right.
And that you think that that it's something that you'd be interested in. I might explore selling a put in
Right.
order to do that as a way to, lower your cost basis if it's something you're considering buying anyway. Because the premiums by themselves are decent.
I mean, a $5 spread costing us $3.78 in the diagonal. That's not the worst in the world that we have there. But if you want, it's all about how you want to get into this and how you want to do it. I mean, you could go with just a cash secured put.
Yep.
There's so many things you can do, but the genesis of every trade we do here has got to start with some type of opinion. And that's what we're failing to get here, is a real opinion.
Well,
on what
but I
we should
mean,
be doing.
we don't have conviction. I'm sure there's people
Right.
who have conviction. We're just trying to make sure
Give
that
them
they
ideas.
understand the mechanics and the logic that goes behind making a trade. Even if I love this stock, and as you guys pointed out, the premiums just don't warrant it, I still wouldn't make the trade.
Right.
I'm not going to make a trade if I'm not going to get paid for
You
it.
said something really important, Kevin. Maybe it's better off to use my capital elsewhere.
Right.
Maybe I get a better bang for my buck elsewhere. And,
All right.
and that's how I look at
And
it.
let's go elsewhere. How's
Okay,
that?
let's do it.
Let's go to Deere Co, which
Not
Ben
John Deere?
Watson just broke. Yeah, not John Deere. So it's just Deere Company. When did they change that? What was the matter with John Deere? I like that name. Kind of rolls off the tongue.
Yeah.
So John Deere, we've got a little different scenario here, right? This is another stock that's down significantly off its highs, but you could say this is an infrastructure play here, right?
Very much so.
This may have something to do with poor grain prices could affect the price of John Deere. There's a lot of things. Any infrastructure spending could really boost John Deere. So if you're looking at a long-term play there, how would you look at that? Earnings tomorrow before the open.
I'm looking more at that chart with much more conviction than I did in Gap, saying, all right, if I did something below the market, sold a put spread, sold a put, whatever it was, and it went against me, I look at this chart and say, all right, I don't mind getting long.
135
here.
level?
Right, I don't mind getting long here. So like you said, Steve, sell a little premium and lower that cost basis.
That 135 strike looks like it's a place where it's spent a fair amount of time and got some support. Let's look for something. Now we've got 3 days to go. We've got weeklies, and we've got 135 puts trading, $3. Here's the problem, though. Look at the expected move. $9 in John Deere.
Yep.
So we're not even close to the move there. If we go down, that. Now we're talking about the 129 strike. But guess what? Still about $1.55 in the 129 strike. You could do like a 129.
Here it comes.
120. Well, yeah, we could absolutely do that.
1x6x5.
Well, you could. Hold on a minute. I think you may have something there. Let's go. Let's see. If we go 129, 127, 125, and then make that a 1x6x5. Now you've got a $1.08 credit on that. Now that is an unbalanced butterfly that we can look at. That, remember, if the stock goes up, you make your credit. If the stock goes down close to the expected move, as you can see, the break even there, 126.39. The percentage on that trade, about 96%.
The reason I really like this trade is A, the credit you're getting of a buck or so. And if the stock does happen to get down there and fall out of bed here, we already discussed it. I personally would be really comfortable having a long position in Deere down there.
Right. So, I mean, that is one way that you can have a chance to make money in either direction. If it goes up, you make your credit. If it goes down, you can still make your credit, but if it goes into that area, you have a chance for that long put vertical to make money.
Nice window
exactly
there.
right. And that's really what you're looking for. Still a high probability trade with risk definition and collecting theta. Fits all our criteria for a good fundamental trade. All right, guys. I think I just talked myself into it if I didn't talk you guys into it.
Conviction.
I really like that idea. Thank you, Kevin, for my idea.
I like this even more. So, all right, and that is in, and we are working a John Deere trade. We decided to pass on Gap. All right, guys, since this, let's wrap the show up with a little wisdom going into the end of the day here. What do you guys think about? Give people your view on how you look at this market as they look at a pretty volatile market here, still down 1 1/3%.
I don't think sentiment changes overnight. I don't think sentiment shifts quickly because, we started the segment by talking about how bearishly all the news gets interpreted right now, regardless of what sector,
good or
asset
bad,
class, doesn't matter. That's not going to change this week. And, it takes a little while for that sentiment to sort of turn. So, I would love to say that I think that we're going to get a little bit of a rally, into this course of the later part of this week where volumes are going to die down. But I think all that rallying is going to be met with selling. I really do.
Scott Bauer?
Range bound slightly to the bearish side here. Take advantage of volatility.
Yep. All right, guys. We have that. Definitely.
But I have one more point, Kevin.
Yes.
Remember, theta doesn't take a holiday.
Exactly.
So guess what? Not. You know why we used to love?
It's the Greek workaholic.
It is. Why we used to love, the holidays? Because it's an extra day or two of theta. So
look at you. All right, that does it for our show, everybody. Tune in tomorrow at 10 a.m. Central right here on the TD Ameritrade Network for another edition of Fast Market. Have a great day, everybody.